Welcome back to the channel. So Opendoor has recently dipped to a level that I think presented a great buying opportunity here today. Now at some point in time, you might have heard of this stock from analysts claiming that Opendoor is the future Amazon of the real estate market. So in today's video, I'm going to break this down into two simple segments. Is Opendoor really the Amazon of real estate, and why Opendoor is such a compelling investment? By the way, for those who are new to Opendoor, just to bring some insight to you, Opendoor is basically an online company for transacting in residential real estate. Of course, you might be wondering what truly separates Opendoor from the rest of the real estate company. Essentially, Opendoor speeds up the entire buying and selling process without ever having to stage an open house, changing the offline process into a simple online experience. This process is also known as iBuying. Just imagine, with the traditional housing sales process, you have to go through not just the agent that typically includes an average broker fee of 6%, you also have closing costs, repair costs, and so on. So this could add up to a total of 9 to 10%. This means that for every $200,000 property that is sold, people are only able to pocket $180,000. And on top of the 10%, the main deal breaker is people have to go through multiple parties and long processes that could drag on from 30 to 45 days of their time to complete the transaction and actually receive their money. Now this is where it all changes with Opendoor's technological disruption. With Opendoor's iBuying business model, people only have to pay for a flat 5% service charge, and the best part is sellers can choose to close a home sales in as few as 3 days. So as you can see, the whole idea of it makes it really easy for people to sell or buy property, and for a relatively competitive pricing, which is probably the most important factor for the buyers and sellers. See, back then, I wasn't really buying into the whole idea of it. Well, because of the few underlying risks such as coronavirus pandemic that has seriously affected their business revenue, as you can see in a steep decline over here in 2020 due to the economic slowdown as well as the massive staff layoffs. But in their defense, that's a given as people were reluctant to move during the pandemic. So I would say they did a great job to adapt quickly to the situation. Now the question is, what led me to change my opinion and buy Opendoor stock now? For me, it all comes down to three simple reasons. 1. Opendoor has a first mover advantage in it. So far, in terms of competition, market expansion, home inventory, and accurate AI data pricing model, Opendoor is well ahead of the race. Thanks to the huge success in iBuying services, competitors including Zillow, Redfin, and OfferPad have also begun to ramp up in order to catch up in the market share. Today, Opendoor's market share has been 50%, followed by 26% from Zillow, 23% from OfferPad, and 1% from Redfin. I believe it will be a duopolistic market between Opendoor and Zillow, kind of similar to Amazon AWS versus Microsoft Azure platform. 2. Opendoor are on track to a blowout Q3 earnings of $1.9 billion revenue. In Q2 alone, Opendoor sold nearly 3,500 homes, bringing over $1.2 billion in revenue, up by 59% quarter over quarter, which was higher than their previous guidance, showing strong recovery since the pandemic back then in March 2020. As a leading indicator to their upcoming Q3 earnings, they have recorded over 8,158 homes under contract to be purchased at the end of Q2, representing $3 billion of value and more than double the number of homes they had under contract at the end of Q1. This means that they are not only on track to beat the upcoming quarter earnings, but also on track to the 2023 targets. 3. iBuyers is no doubt the way to future. When it comes to technological disruption, we think of Carvana, Amazon, or Netflix that have pretty much replaced the way we used to do things, right? Well, except for the real estate market. For this reason, I believe that Opendoor will turn out to be the biggest winner and continue to gain meaningful market share. After all, they currently have less than 1% of the market share of $1.6 trillion market. Simply winning a small percentage of the market share could dramatically increase revenues. Overall, looking at the big picture, I see Opendoor as a solid investment that is worth buying and holding for the next 5 years. At the moment, many people remain bearish on Opendoor, but I think they are making a massive mistake on that, as Opendoor is extremely misunderstood in the market. If anything, I see this as a 10x investment thanks to the technological disruption that we have witnessed, such as Carvana, Netflix, or even Spotify. Currently, I'm holding at an average price of $17 and will be looking to add more if it dips below that. Well, that's all I have for this video. As always, please hit the thumbs up button so that this video can reach to a brand new audience, and subscribe for more videos like this. Till next time.